The Senate Finance and Appropriations Committee will come to order. Clerk, please call the roll.
Madam Chair, you have a quorum?
Thank you, MJ. This morning, we have a number of House bills that are similar or identical to Senate bills. We also have, I believe, 3 bills that have not been heard in the Senate. In addition, we will be hearing from the Secretary of Finance, Secretary Cummings, about the latest update on revenues. So with that, we will begin. Let's start by doing House bills that are identical to Senate bills. In the past, we've tried to put them in a block, and it never worked. Everybody took everything out of the block, so we were blockless. So I'm not even going to try this time. So the first bill that we have that's identical to a Senate bill is House Bill 180, Delegate Bloxham's bill. Is there a motion on the bill?
Second.
It's been moved and seconded that House Bill 180 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. Next is House Bill 791, Delegate McNamara's bill, and it's identical to Senator McPike's bill. Is there a motion on that bill?
Second.
It's been moved and seconded that House Bill 791 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. Bill's reported. And the third bill that's identical to a Senate bill is House Bill 141, Delegate McQuinn's bill. It's been moved and seconded that House Bill 141 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. Wouldn't you know, I should have put them in a block. Now we have House bills that are similar to Senate bills. The first is House Bill 186. Okay, April.
Madam Chair, House Bill 186, Delegate Campbell's bill is very similar to Senate Bill 595, Senator Pillion's bill, which passed the Senate 40 yes, 0 no. There are some additional provisions in this bill, which include requirements related to the jobs and capital investment that are very similar to what we normally do. So the recommendation was to pass the bill.
Move report. Second.
It's been moved and seconded that House Bill 186 be reported.
Easiest 30 seconds I've ever spent in the Senate.
All in favor, please record your vote. Or opposed also.
Ayes 15, no zero.
Ayes 15, no 0. Next up is Delegate Hodges' House Bill 951. April?
Madam Chair, House Bill 951, Delegate Hodges' bill is very similar to Senate Bill 77, which Senator Norman had, which was incorporated with Cosgrove, which passed the Senate 29 yes, 11 no. This has to do with allowing any county with a population of 5,000 or less to conduct a real estate assessment every 3 years. The Senate bill allowed any county, regardless of population size, to conduct that assessment every 3 years. The recommendation was to conform to Senate Bill 77.
Second.
It's been moved and seconded that the bill be conformed to the Senate bill. All in favor, please say aye. Aye. Opposed? It's been moved and seconded the conformed bill be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. The bill's reported. April.
Madam Chair, the next bill, House Bill 1087, Delegate Lefwich Bill, has to do with local taxation for projects of 5 megawatts, solar photovoltaic projects. It's very similar to Senate Bill 502, Senator Lewis's bill, which passed the Senate 39 yes, 0 no, and relates to exemptions for such project be 100% of the assessed value. That was the difference. Senator Lewis's bill excluded that provision, so the recommendation was to conform to Senate Bill 502.
It's been moved and seconded the bill be conformed to the Senate bill. All in favor, say aye. Aye. Any opposed? Bill's conformed. It's now been moved and seconded that the bill be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. Bill's reported.
Madam Chair, the next bill, House Bill 1076, Delegate McNamara's bill, is similar to Senate Bill 25, Senator Ruff's bill, which passed the Senate 40 yes, 0 no. It has to do with unsold inventory related to cigarette taxes. House Bill 1076 requires additional information be included in the tax return and imposes a deadline of 6 months after the tax rate increase to file the return. The recommendation was to report.
Move to report.
It's been moved and seconded that House Bill 1076 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. The bill's reported. Similar, okay. So now we have bills that are that we haven't dealt with before. And we will start with those bills dealing with state and local taxes. The first is House Bill 222, Delegate Coiner. 226.
Good morning, Madam Chair. House Bill 226 is brought forward to clarify the process for Virginia citizens to appeal the decision of real estate assessments from the Board of Equalization to the Circuit Court. One of my constituents actually noticed that the code is unclear as to who the proper party should be in such a case. So our changes to the code section make it clear who the proper party is, as well as the method name of the instrument to appeal. So that's what the bill does. Be happy to
Okay.
answer any questions.
Are there any questions for Delegate Coiner?
Move to report.
Senator Sasslaw.
You know, I don't know how, where are you from?
I'm from City of Hopewell and Chesterfield.
The reason that I, bring that up is historically, at least in our region, Fairfax, their assessments have been way below what people sell the homes for to prevent, so as they don't get hit with a ton of appeals. They don't do that where you are? They generally are about 20% below what probably is the market value.
This particular gentleman, it was about that his assessment was higher than he felt like it should have been, but this is really only fixing who the parties are in the suit. It's not addressing whether the amount is over or under the assessed value.
Madam Chair, in the
Senator
world where
Reed.
I live, you just sue the local government. But I think this is just clarifying if
Okay.
This is a bill that we have not heard before, so I'll ask, is there anyone who wishes to speak to the bill?
If you're in the Zoom room and would like to speak in favor of this bill, please raise your hand electronically now.
Seeing no one wishing to speak, is there a motion on the bill? It's been moved and seconded that House Bill 226 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no 0. The bill is reported.
Thank you, Madam Chair.
Next up, House Bill 1010. Delegate Durant.
Good morning, Madam Chair, members of the committee. House Bill 1010, Paramount House Substitute, addresses the common practice of localities maintaining the prior year's tax rate and allowing tax bills to rise with assessments. So by decoupling the effective rate advertisement from the budget advertisement in the newspaper, it will highlight the effective rate and provide greater transparency to the assessment process. So knowledge is power, and this transparency is vital to taxpayers as they face rising tax bills throughout the Commonwealth. happy to answer any questions.
Are there any questions?
Madam Chair,
Yes.
this has just become a notice bill, right? I mean, it's just a notice bill and how you place.
Correct,
It's
yes.
not- it's
It
not what
requires a separate notification in the newspaper. So for localities that have assessments more than once every 4 years, the notice for that public hearing shall be published on a different day, and a notice from the annual budget hearing.
Great, thank you.
Madam Chair,
Senator Deeds.
I just would like to have a question to staff. My notes indicate that as this bill was introduced, it was identical to Senate Bill 620 that died in this committee, and I wonder what the differences are between then and now.
Madam Chair, Senator Deeds, I believe the bill you're speaking to would have required a referendum prior to a rate increase, whereas this is just a notification. So it's markedly different than that bill.
Okay. So a referendum could be added back to this bill, I guess, once it gets to where it has to go.
Charles, did you have a?
Good morning, Madam Chair. Charles Kennington, Deputy Secretary of Finance. Just to answer the question, the bill that was before this committee earlier did require different levels of voter approval depending on what the rate of increase on the local real estate levy would be. This bill is, in its current form, is really an important transparency bill, and the administration does support it.
If I could ask, Charles, the administration supports it in its current form and won't change it?
The administration supports it in its current form. Yes.
And won't, it might depend, the answer may determine whether it gets out of here.
Madam Chair, I wouldn't presume to speak for the governor, but my understanding is the governor and the administration is happy with the bill in its current form.
Second.
It's been moved and seconded that House Bill 1010 be reported. Please record your vote.
Ayes 6, noes 9.
Ayes 6, noes 9, the bill is not reported. Let's see. House Bill 911, Delegate Orrock.
Good morning, Madam Chairman, members of the committee. Madam Chairman, members of the committee, House Bill 911 is simply permissive legislation allowing local governments to grant forgiveness on certain fees for individuals who are engaged in local volunteer activities, fire, rescue, auxiliary police, or others that are serving the county's citizenry purpose through not-for-profit. The guardrails on this, besides just being permissive, the local government would have to effect an ordinance where the public would know what the process would be. It's just to try and encourage volunteer activities within our local governments.
Are there questions for the delegate? Would anyone like to speak to this bill?
If you're in the Zoom room and would like to speak to this bill, please raise your hand electronically now. There are none at this time, Madam Chair.
There are some present to speak in support if you'd like to hear, but otherwise, yeah.
I think it's in good shape.
Madam Chair, can I just ask a couple questions?
Yes. Senator Peterson.
So, Delegate, you're saying that this would be credit against taxes for an individual who provides services. Does this mean, let's say I serve on a volunteer firefighting squad, that the hours I work, I mean, that would be a credit against my property tax, a credit against my car tax? I mean, how would this actually work?
And that's why I've left it open-ended. Now, as far as property tax, things of that nature, I believe it would not be constitutional for them to treat them separately. But so far as what I'm envisioning, specifically in my area, they've implemented a local landfill fee, and where the county could waive that fee for individuals who gave a certain number of minimum hours of volunteer service to the community. Similarly, the county decal, things of that nature. But of course, anything they do would have to meet constitutional muster, so we're not talking any major revenue loss.
Right, because it says taxes, and I do have a recollection somewhere in the recesses of my mind when I was on city council that we had some type of waiver for property taxes for people that were on our volunteer fire department. I can't remember exactly how that worked.
I don't know either. I apologize for that.
All right. Yeah. The personal property? Okay. All right, thanks.
Thank you.
Are there further questions or comments? Okay, is there a motion on the bill? Move to report. It's been moved and seconded that House Bill 911 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no zero. The bill is reported.
Thank you, Madam Chair. Members of the
Madam
committee.
Chair, I have a motion. Madam Chair, I'd like to move to reconsider the vote by which we defeated House Bill 1010.
It's been moved and seconded, the vote by which House Bill 1010 was not reported be reconsidered. All in favor of reconsidering, record your vote.
Ayes 15, no zero.
Ayes 15, no zero. The bill is now in front of us again.
Madam Chair,
Yes.
could that bill go by temporarily? I think there can be fully developed thoughts on that question you ask, and I'll get back to you.
Okay, good, thank you. So the bill is passed by temporarily. House Bill 1231, Delegate Robinson.
Good morning.
Good morning.
So House Bill 1231 is a bill that just says if the Commissioner of Revenue or other assessing official in a particular locality will take high mileage vehicles into consideration, automobiles, when they're assessing the value, we want to have the same thing applied to motorcycles. Because some people only use a motorcycle to get back and forth to work, and we feel that should be, they should be considered equal. That's the bill.
Okay, are there questions for the delegate? Would anyone like to comment on the bill?
If you're in the Zoom room and would like to speak to this bill, please raise your hand electronically now.
Yes, sir.
Matt Danielson, Virginia Coalition of Motorcyclists. We asked Delegate Robinson to bring this bill because there are numerous localities that do give tax abatement for what their definition of high mileage vehicles. Most of these localities do not include motorcycles on the theory that motorcycles are recreational vehicles, which for many people in the Commonwealth, they're not. They're the primary form of transportation.
I'm sorry, can't quite hear you.
I'm sorry.
Good, thank you.
Many localities in the Commonwealth of Virginia offer tax abatement for what they define as high mileage vehicles, but most of these localities do not include motorcycles, we have found, on the theory that motorcycles are recreational vehicles only. For many people in the Commonwealth, the motorcycle is their primary form of transportation, and for some, it's their only form of transportation. We're not looking to be treated any differently. We just want to make sure that owners of motorcyclists who otherwise meet the same definition of other motor vehicle owners receive the same tax break.
Great, thank you. Is there a motion on the bill?
Move to report.
It's been moved and seconded that House Bill 1231 be reported. Please record your vote.
If we agree not to amend it.
Ayes 15, no zero.
Ayes 13, no zero. The bill's reported.
Thank you.
Thank you, Delegate. Next up is House Bill 368, Delegate Williams-Graves.
Good morning, Madam Chair and members
Good
of the
morning.
committee. House Bill 368 seeks to create greater efficiency in how erroneously assessed taxes are returned back to citizens. This bill seeks that any county, city, or town may authorize the treasurer to approve and issue a refund up to $10,000 as the result of an erroneous assessment. This bill is important because, number one, it does increase greater efficiency. Number two, it is returning taxpayer dollars that they have been charged and paid erroneously. And number three, it also saves localities money and time. And I would move that you would report.
Okay, are there questions for the delegate? Does anyone have a comment?
If you're in the Zoom room and would like to speak towards this bill, please raise your hand electronically now. There are none at this time, Madam Chair.
Okay, is there a motion on the bill?
Move to report.
It's been moved and seconded that House Bill 368 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no zero. The bill's reported.
Thank you all for the home run.
Okay.
Have a great day.
Next, we have a block, well, they're not a block, but House bills that are not dealing with local taxation and are not related to any Senate bill. First up is Delegate Hope, House Bill 671. I don't see him. We'll pass it by temporarily. House Bill 693.
Madam Chair?
Yes.
I just got a text from Delegate Hope asking if 671 could go by, I assume for the week,
For the day.
for the day.
Okay. Without objection, it'll go by for the day. Okay, Delegate Keem.
Thank you, Madam Chair, members of the committee. House Bill 693 is trying to solve a problem that just came up fairly recently. As you know, we have had a car tax relief for a long time, and as some estate planning attorneys are now using revocable trusts as a way to help people with assets, they'll move the cars along with everything else that they own into these revocable trusts. So the DMV, without really thinking it through, just automatically puts those as business use as opposed to personal use, even though it's a personal revocable trust. So the attorneys will have to then contact the DMV, work with the controls and such. Ultimately, they'll end up having it done as a personal property tax as opposed to business tax, but it takes a little bit of a cumbersome process. So what the attorneys have asked is to clarify the codes, and I've worked with the DMV as well, and they're able to make this change happen. So the bill will automatically say that if it's in a revocable trust for personal uses, it will be considered personal use. I do have an attorney that's online if you need any questions, but if not, you can also just watch as well.
Okay, are there questions for the delegate? Would anyone like to comment on the bill?
If you're in the Zoom room and would like to speak towards the bill, please raise your hand electronically now. There does appear to be one, Madam Chair. Give me a second and I'll bring them in.
Okay.
Mr. Ruttenberg, please unmute and begin your testimony now.
And there'll be 1 minute for testimony.
Good morning, panel. My name is Daniel Ruttenberg. I'm an estate planning attorney in Virginia. I do a lot of planning for clients, a lot of older clients as well. As part of that planning, I often recommend a revocable living trust. And with a revocable living trust, we do that so that the clients can avoid having to go through probate and give the best access to the assets in the event of a disability. In order to properly utilize a revocable trust, you need to move your assets into those. So we move in real estate, we move in brokerage accounts, and I often recommend that they put their cars in the trust. What I've found is that the DMV's default system is to label the car as business use, and that when you're trying to get car tax relief, that is how they determine whether or not you qualify. And when I had to do this for myself, the process I had to go through was I went the first time, aware of the issue, and I was told it would be characterized as personal use. But when I got my car tax bill, it wasn't. So I had to go back to the DMV, explain what happened. And that time I was told there's no way to do it. I then went to speak to management, showed them the provision that I wrote for the trust that says it specifically qualifies for car tax, something that's not required. And they had to write me a letter. And then I had to take that letter to the Commissioner of Revenue because they could not find a way in their system to make it work. And from there, I then...
Frustration, but you're almost half a minute over time.
Oh, I apologize. So I just hope that this passes so that my clients don't have to deal with this.
Thank you. Yes. Senator
Motion
Evans.
if it's appropriate.
Yes, it's appropriate.
Move to report.
It's been moved and seconded that House Bill 693 be reported. Please record your vote.
Ayes 15, no zero.
Ayes 15, no zero. The bill is reported.
Thank you, ma'am. Thank you.
Thank you, Delegate. Next up is Delegate Simon, House Bill 338.
Thank you, Madam Chair, members of the committee. House Bill 338 is a recommendation of the Code Commission. It takes out a couple of lines of text that had to do with sort of a statement of the purpose of the VRS and deletes 3 code sections that were not set out as no longer being relevant.
Okay. Is there anyone who'd like to speak to the bill?
If you're in the Zoom room and would like to speak towards this bill, please raise your hand electronically now. There does not appear to be any at this time, Madam Chair.
Okay. It's been moved and seconded that House Bill 338 be reported. All in favor, vote aye. Opposed, nay.
Thank you very much.
Ayes 15, no zero.
Thank you.
Ayes 15, no zero. The bill is reported. Our last bill, other than the bill that's been brought back, is House Bill 654. Delegate Wampler.
Good morning, Madam Chair.
Good morning.
Members, I have House Bill 654, which just removes an enactment clause on the underlying piece of policy. That's the Virginia Growth and Opportunity Act, Go Virginia. The underlying piece of policy allows for the Go Virginia grant funds to be matched with Tobacco Commission grant funding. This match is critical to getting quality projects off the ground in Southside and Southwest Virginia. We've already been able to see some major successes in the first 2 years of this being policy, and would hope that the committee would see that this enactment come off the bill and allow this policy to be permanent.
It is not at all our tradition in the Senate to make this kind of thing permanent. So we do have a proposed amendment.
Madam Chair, your proposed amendment that was requested would be to extend the sunset by another year.
So moved.
Second.
The amendment to postpone the sunset another year is in front of us. All in favor, please say aye. Aye. Any opposed? It's now been moved that the bill as amended be reported. All in favor, record your vote aye. Opposed, no.
Thank you, Madam Chair.
Senator Norman, how do you vote?
He abstained.
Yes, sir. Ayes 15, no zero. Abstentions 1.
Ayes 15, no zero, abstention 1. The bill's reported. And now we will go back to Delegate Durant's bill, House Bill 1010. Senator Newman, you had asked for this to be brought back.
Right. Madam Chair, I think that you ask a pretty important question. I think Charles has a really good answer for you.
Very good one.
Good morning again, Madam Chair. Charles Kennington, Deputy Secretary of Finance. In the intervening moments, through the miracle of modern technology, I have been able to confirm for you that the governor does not intend to pursue any amendments to the bill as it is in its current form.
Thank you. That's
Move to
very
report,
helpful.
Madam Chairman.
It's been moved and seconded that the bill be reported. Please record your vote.
Ayes 16, no zero.
Ayes 16, no zero. The bill is reported.
Thank you very much.
Thank you. Okay. Next, we will have a report from Secretary Cummings. It's very nice to see you.
Thank you, Madam Chair, and everybody on the committee. Thanks for having me again. I have a presentation that I would like to go through with you again, and maybe before we get into it, I just wanted to make a few overall comments and summarize where I think we are and what I'm trying to accomplish today. Obviously, we'll be presenting the outcomes for January, and all of you know very well by now it was a pretty remarkable month of revenue collection. The 6th consecutive month of our revenues exceeding exceeding prior year by more than 15%. So pretty remarkable times. 22% year-over-year growth in the month of January. Based upon, am I okay? Was that a censor?
The gremlins are back.
I thought it was bleeping. I didn't say anything inappropriate, I hope. But strength in all sources of revenues, and year-to-date 15.4% growth versus a 4.2% forecast. However, before we get into the presentation, I wanted to follow up on last month's conversation that I had with you and also had with the House Appropriations Committee about the state of the economy in Virginia. Some very pointed points made to me about some things that were said, and understandable challenges to me and those comments from all of you about our economic health and growth. So what I'd like to do, not trying to start an argument, but just to share with you what we're building is a series of slides/metrics that we're going to look at that we're developing right now that we plan to, that will become a part of a standard scorecard for all of us in the governor's office. And we hope that we can work together on this and it will become something that we all can look at as a measurement of progress of the Virginia economy. In some of the conversations that I had last month after the meeting, people who came up to talk about it, I said that when we debate this topic, I think it would be better if we can have metrics we talk about that measure success. I know that there are some very nice ratings and awards, which are very important for us for marketing purposes, but I think we've got to look at real results, and that's what we're trying to build here. My opinion, when we look at all this, is we have a lot of work to do if we want to be out there and win with sustainable growth as our outcome. That's not only what's best for the Commonwealth, but it's a very important criteria for rating agencies. Sustainable revenue streams that are growing relative to our budgeted expenditures. Obviously, the extraordinary level of revenues for the government is great, but it does not indicate success in our economy. It's a result of external factors and, in our opinion, taxes that are too high. Taxes that are too high and growing too fast do put a heavy burden on our citizens at a time when, while many are prospering, there are many who are struggling in the face of inflation. That's this high point in the last 40 years, and for many, real wages are actually declining right now. We know that's a very big concern of the Fed, and that is a further deterrent for people to come to our state, individuals and companies. I think, unfortunately, if we start to believe that our revenues in this, at the government are indicative of healthy economy, that can be a dangerous conclusion and cause us to really accept this where we are is the status quo is okay, which I don't believe it is. We're lagging the nation right now, much more significantly the competitive states that the governor has identified, which I think is a good comp group: North Carolina, South Carolina, Tennessee, Georgia, Florida, Texas. They're clearly winning in the battle for this in this area. And we're lagging in population growth, job growth, and recovery from the pandemic, where we rank, depending on the study you look at, 42nd, 48th, or 49th out of the 50 states in our country. Our employment is low, and in one sense, that's a very good statistic, but reliance on that data point is dangerous in my opinion and can lead to a false conclusion.
Mr. Secretary, or Madam Chair.
I think perhaps we should save the questions till he's finished.
Is there a PowerPoint to this?
I'm going to go to that. I'm just trying to
I'm
give you
sorry.
I'm going to whip through the PowerPoint. I'm trying to get to an executive summary comments right now. I'm sorry. Yeah, no problem. So while unemployment is low, which is good news for many people here, can lead to a false conclusion about where we are. We have 300,000 open positions currently in the state. That's up 100% since the pandemic arrived. So we all know companies are struggling to get workers, particularly smaller companies in the service sector. This is a critical problem for all of them. We see evidence of this every day. Staying in a hotel, I haven't had my room cleaned in 10 days, and because of a lack of people who are there to be able to do that is a great example. And that situation, shortage of workers, is a real problem in attracting companies to come to our state. Major contributor to that is participation rate, which we're going to talk about here. Our participation rate has declined 3 times what's happened nationally and much more relative to our peer group states. And over the past 8 years, which is a study which done previously, we've had a net out-migration of 100,000 people out of Virginia going to other states. It's a very serious issue for the long term. I believe the good news is that this can be fixed. We have a problem, and if we all acknowledge it based upon the data, we can align and address those issues, and over the long haul, we can build this. And I hope that this kind of work is not a political moment. So let me now move on to the...
Secretary, I think this is a good time to have a question or two.
Sure.
Before you go into that.
Sure.
Senator Sasso.
Listening to you, you'd think we were the poorest, most bankrupt state in America, and everything's gone to hell in a handbasket. Companies are lining up. Let me repeat this, lining up to come to Northern Virginia. Would they be doing that if we were taxing them out of existence? I mean, give me a break. How do you explain that and the fact that virtually none of us here ever get emails saying, oh, geez, you need to cut taxes? Then you saw the WASM poll yesterday that came out. People don't, the public doesn't agree with you at all, or most of them don't. How do you explain the fact that we have virtually full employment up there? The companies are lining up to come here, high-tech companies. They don't want to go to North Carolina. I know I'm fully familiar with the triangle down there. How do you explain all of that as opposed to what's happening?
I appreciate that, Senator.
Oh, and one other question. One other question. You hear a lot about how unfriendly California is to do business. 2 years ago, I didn't see it for last year, but in 2020, 58% of all the venture capital money in America was spent within a 40-mile radius of San Francisco. I mean, how do you explain all this?
I have data.
Why are they going to Northern California and coming here if we're such a bad place to do business?
I think you need to look at data and look at what's actually going on in California. If you're in the venture capital business, California is very affordable.
Is what?
Is very affordable. And it's being in that Northern California region. I have children who live there. It's a great place to be and live if you can afford it. But actually the metrics on California will really surprise you and what's really going on in that state.
But
so
the venture capitalists are, Madam Chairman, the venture capitalists, though, don't seem to agree with you.
How many people do you think that employs?
I don't know how many it employs, but it's where all the high technology is going.
Yep. Can I go through my presentation?
Sure.
Because there is data around this, and that's what I'm trying to say is I understand where you come from and I understand your anger, but I do think this can be a fact-based conversation and we can debate what the facts tell us. But we have data here that supports everything I've just said, and I do believe that there's a problem here because the state is not growing jobs, it's not growing its economy. So I want to have this fact-based so it's not an emotional, anecdotal conversation. So if I can go through this and you may still not agree with it, then I'd be happy to have that discussion. Because what I want to finish is, and any other questions, sorry.
Oh, yeah, were there any other questions at this point?
I think I will address most things as I go through this, and I will speed up here. The good news is I want to end on a happy note of that monologue. We are in phenomenal financial condition right now. So we can do a lot of great things. You're doing a lot of great things with what's going into the amended budget that will address some of these issues and achieve the goals. And I do believe part of that is returning money to taxpayers. So we're going to go through the data here first, then we'll go into the traditional monthly review, and then touch on the mid-season forecast, which all of you, most of these things you're all well-versed in. So chart one, this is annual GDP growth rates. You can see here consistently, if you just look at the colors, red is U.S., blue is Virginia. Consistently, we are lower between 2013, which is this beginning time frame, roughly 10 years. Virginia's economy has grown at 0.9%, while the U.S. economy has grown at 1.8% over that time frame. In the latest quarter, this data is available, third quarter of 21, Virginia grew at 3.6%. The U.S. economy grew at 4.6%. Obviously, the costs of doing business, our government is growing at a much higher rate, and I think we all know this is another issue for rating agencies. Over a long period of time, it's not sustainable for our budget to continue to grow at a significantly higher rate than GDP. Those lines cannot sustain themselves, and I think it's something that, in my mind, is something that we have to talk about and to address. The next page, U.S. and Virginia economic data. Okay, this is employment. You can see here what came out of the pandemic, how the world rebounded, and then what happened in the recovery. All the little gray lines, I apologize, it's not capable of tracking each state, but I think you can get the gist here visually. that Virginia lost $442,000 of jobs at the depth of the pandemic. And as of December 2021, we'd recovered 229,000. That's 52% recovery rate. That ranks us in the 40s in the country for recovery. And you can see at the bottom of the group here that we compare ourselves to, the states that we think are relevant in the national average. This next view is employment changes. This is employment change since January 2020. And here you can see, again, that we've dropped 3 times the national average when compared to competitor state, or to the national average, and more than that versus the competitive states. And interestingly, 3 of the states that we compare ourselves to, Florida, South Carolina, and Georgia, are above where they were pre-pandemic. Here is job openings. On the right side, obviously this is an issue nationally, but on the right side you can see that our job openings have doubled during the pandemic. We still have too many people sitting on the sideline that we need to get to re-enter. There are a lot of reasons that contribute to that, but the reality is that this, in combination of an out-migration, does cause for real stress for our companies. And we do know that that's an issue. I know that there's a lot of conversations in Commerce, our Secretary of Commerce area, about that, and people who are coming to the state who are struggling. I think actually Amazon is one of those that we're trying to help them figure out how they can attract more people to come and fill the many, many jobs that they need to fill with their new HQ2. So another way to look at employment change, this is a participation rate, which we've talked about a lot. And you can see Virginia is consistently higher participation rate relative to national average and our competitive states. And the takeaway on this is that our participation rate has dropped by 3.5 times what has happened nationally. Again, that's an important part of the stress here. This next chart I think would be interesting to all of you. This is a look at the major hubs in Virginia and then rest of state. And this is a recovery rate analysis. It shows the drop at the time of pandemic and where we are now as of December. Interestingly, Northern Virginia has recovered 60% of its jobs that it lost in the pandemic. Richmond has recovered only 30%. It's the lowest region of any in the state in terms of recovery. Virginia Beach has recovered 45%, and frankly, I was quite surprised to see that the rest of the state has recovered almost 80% of its jobs. We don't have a lot of good explanations about why rest of state has done that. We're digging into it. We've got ideas, but that's something we're digging into. We spent some time with the Fed economists to try to figure that out, and honestly, it's the composition, obviously, of the employment force, but I thought was a pretty surprising outcome from that study. So, finishing up on the economics here, this is the world we're in right now. Not surprisingly, consumer sentiment falls in the opposite direction of CPI. We have now CPI at almost 8% year over year. That's absolutely not sustainable. That's got the Fed very worried, and we're hearing now of 5 to 7 rate hikes over the course of the rest of this year to start to address this. Everybody's worried that they go too far and that we do trigger things. I think the reality is they're going to do several, probably what I'm hearing 3 in the next 3 months. Watch and see what happens, and then assess what the need is to go beyond, so they don't hit the brakes too hard. I've been talking to a number of people that I have known over the years, economists, leaders of banking businesses, to hear what they have to say about things. And I'd say, frankly, despite a lot of things out there that are popping up that is, would be on the concern list, that the attitude of corporate boards, of the C-suite, is still quite bullish. That demand continues. The world is very liquid. They have positive outlook for their earnings. Jobs are an issue. But they've been able to pass through labor price increases. Supply chain seems to be sorting itself out. Asia is getting its world cleaned up. So that's been a big driver here. And so actually pretty positive about where we stand right now. Obviously, the news of the day, literally of the day, is Russia and Ukraine. And I think today, last time I looked, the futures would show the stock market's going to pull off a bit. But a lot of this was priced in. And I think it's going to be all about the extent to which they enter the Ukraine. Right now, it's kind of carved off a piece that is kind of pro-Russia or aligned with Russia. And I think the world has priced that piece in. And as of right now, the good news is that that's a pretty well identified risk factor, which is around energy. And that's the main driver they have for Western Europe, and it will drive global energy prices. Oil prices have spiked. They're up, last time I looked, about $100 a barrel. And people are saying if this thing persists and the embargo does get fully implemented, you could see oil going to $120, $130 a barrel. So that's another inflation risk we have. I think the question is, how did the U.S. respond? We've gone from self-sufficiency to actually an importer of energy now again, a lot of actually importing from Russia. So what do we do to respond to that? Because that's going to add more inflationary pressure to our economy. At this point in time, unless it becomes a full invasion, which God forbid, it feels like that's something that's pretty well understood and not of a huge level of concern at the moment. So with that, let me now quickly go through the monthly update. I think you all know this well enough so I can move quickly. Again, I said at the beginning, excellent month, up 22% overall general fund with strength across the board, 15.4% year to date. And if you look at withholding, we had a big bump in January. There's some data, unique events that took place on timing of withholding payments that drove that. So that's a little bit of a false positive. Probably give some of that back in the next month. But it was strong, looks like across all industries. Non-withholding. Oops, I didn't advance that, sorry. Moving to non-withholding. Again, very strong month, 26.4% year over year. December and January are 2 months you really want to look at together because they're significant payment months and it could be distorted by timing. But those 2 months are up 27% year over year versus last year. So that continues to be strong despite some of the current volatility in the market, largely off of estimated payments. These two areas, the individual refunds, not big movers of the overall number. I don't feel like I have to spend much time on this. Sales tax, again, excellent period for January. You got to look at December and January together to get a full sense of holiday sales. Conclusion is the holiday season exceeded expectations, very strong, I think reflecting the health of the consumer with being so liquid and unleveraged. Corporate income taxes, again, also a strong period. Year to date, corporate taxes are 55% compared to the 13.6%, up 55% versus the 14% that was in the original forecast. These two items, again, not meaningful within their own right. And this chart is now getting to the revenue reforecast, the money slides. You can see here, if you look at the second column, we're 15.4% year-to-date actual. If in order to meet our original forecast, that means we could be negative year over year by 8% if you go to the next to last column. Obviously, very conservative outlook for the next 5 months. And now when we're 1.4 billion ahead of the original forecast. And as you all know, the conclusion by the governor based upon that was that we would reforecast for 2022 by adding 1.25 billion, money in the bank, and a conservative outlook. There are some things, particularly in non-withholding, great uncertainty about what will be final payments at the end of the year, and felt like it was the appropriate thing to do to keep it at 1.25. And it's a time when we just continue to need to watch very closely of other things that can drive the outcome here. And this is now the adjustment based upon that reforecast. So, Madam Chair, that concludes my presentation. Thank you.
Thank you, Mr. Secretary. Before I ask for questions, I do want to make a comment referencing your back and forth with Senator Sassler. I've been here 30 years now, and I can count on both of my hands the number of complaints I have gotten from Virginians about Virginia taxes. But I get on a daily basis, every day for 30 years, stories from people, pleas from people for better services. And I think that that is what you're going to find is a very different approach from this administration.
I understand.
Okay.
Thank you.
Senator Eben, you had a...
Yeah, thank you, Madam Chair. Mr. Secretary, I noticed I got a press release the other day about the passage of the Senate and the House budgets from the governor, and he said in the press release that his tax package would be worth $1,500 to a typical Virginia family. And I was wondering, how do you come up with a $1,500 figure, and what do you consider a typical Virginia family in terms of size and income?
Yeah, I can't give you the details on that. Honestly, I can come back to you on that. But the $1,500 is the year one impact with the rebate, with the double the standard deduction, with the grocery tax relief. So you put all those things together, but I can come back with the specifics on how the definition of the average family is
Madam
done.
Chair, I'd appreciate that because I think that it's important that we know who the tax relief is going to in terms of size and income.
Okay, we'll come back to you.
Thank you.
All of you on that.
Yes, Senator Norman.
Madam Chairman, my question is less argumentative, and I'm just curious, what do you attribute the slow recovery for Richmond from the pandemic and economic situation we've gone through? I mean, that's surprising.
It's stunning, honestly, and this is something that, this chart was recently created, and we've met with, as I said, the Fed economists who do some regional analysis. We don't have a good answer for that, but we want to dig into it, because I think there's got to be specific issues that that Richmond needs to understand and see if we can address. So I'll find out. We'll hopefully learn more.
Okay. Senator Newman.
Thank you, Madam Chair. A couple of items, Secretary, I guess to the Senator Norman's question, also the question about whys in Virginia Beach. I mean, it's quite dramatic also in Virginia Beach that the recovery has not been what it's been actually in my part of the state and some others. The other is about your new metrics. I really appreciate the fact that it's much like what we get when we have the Richmond Fed come to us, right? It's just facts, right? And then, we can all editorialize on it, but I appreciate that. The one item that I think would be helpful there is most of them have source data in the slide. Some of them do not. If you could just provide that.
We tried to capture that, but we will make sure we have that in the future.
Madam Chair, the other item relates to something that I think we're all going to be dealing with sooner rather than later, and I know you're struggling with it, but it is the item of where does inflation end? And I know it's an entertaining question for all of us because it impacts our families, but the question is, where does inflation end for the state budget? My concern is when you look across transportation and the 6-year plan, or you look across where we need to have employment, it's going to have an impact on our state budget sooner rather than later. Maybe I just get, if you have any preliminary thoughts. I know you're concerned about issuing 2023 numbers. I think that's wise, but how much is inflation actually going to impact our budget when we have to pay more for everything else state government does? So that's a concern.
I guess if you can say that's the good side of the double-edged sword of inflation is our revenues will go up as well, right? So that is helpful. I just say in general on the inflation issue, we're at 7.6% at the latest data point. Consensus has been that by the end of this year we'll be in that 3.5% to 4% range. So it starts to come down, supply chain issues that start to get worked out, I think would be a major piece of that. The Ukraine issue, it could change that. If we get a big spike in energy costs, that flows through, as we know, a lot of segments of our economy. So that's something that I think right now, if it was an over and under, you'd think it probably has a chance to be above that. But I do think that it starts to abate.
Madam Chair, just one more thing, if you don't mind.
Yes, Senator Newman, then
Just-
Senator McClellan.
Just maybe by the time we get back together, one of the items, the labor recovery rate is important because government is competing with everyone else to get employees, and it's getting worse as we're seeing more retirement. So maybe if there can be just some thought, maybe going forward on how that could potentially impact us, not only on inflation, but our ability to actually hire these individuals. So.
Great.
Senator McClellan.
Thank you, Madam Chair. A couple of follow-up questions, particularly on your exchange with Senator Norment. As I recall, when the Senate Finance Committee had its retreat back in November and we received presentations on job losses, it divided those out by sectors. I think it would be helpful if we could see the employment numbers by region, by sectors, because leisure, hospitality, education and health services, retail and trade, professional and business services.
Yep. We have that. We can get that.
Thank you. I think that's going to answer part of Senator Norman's question. And then following up on the chair's point, I think it's really important to understand we have not been fully funding K-12 education. Just two areas in particular, we've never fully implemented. Since I've been here, the Board of Education's recommended standards of quality, which is between, $150 and $200 million a year. We've never backfilled the funding when we put a cap on state funding for support personnel, which provide the wraparound services such as mental health, social workers, et cetera. That's almost, $500 million a year. Those are just two examples. We're not fully meeting our behavioral health needs. So to Senator Howe's point, what I hear in my district and when I've traveled around the state is a desperate cry for fully fund K-12, which is one of the factors that businesses look at whether to come here is the state of our education system. And in some parts of the state, it's better than others, not because of the instruction provided, but because are we meeting the needs of the students in that community? So when you're balancing out, are we overtaxed or not, think about, are we meeting the healthcare and education needs of our children and our families? Because businesses do look at that in deciding where to go.
I 100% agree with that, those all factors that are considered. I guess that my general answer to this and to Senator Saslow's comments is we have to be able to explain why we are not growing then. Because I understand people are not complaining right now that you're taxing me too much, but why is it we're lagging all these other states? Why are we lagging the national average in our ability to grow our economy? There's got to be an explanation. And so I would, this is where the data has to have an explanation, and over a period of time, it's not happening here. And you cannot, my belief, I'd be interested to have different opinions on this, you cannot grow government at high single-digit rates when your economy is growing at 1 or 2% and hope to have an outcome that's going to be positive from a long-term financial health. That's an opinion, but I think the data is going to show. We've been spending a lot of time looking at our rating agency work that we have to do, trying to tie our budgeting into that. And it's very clear that what they're looking for, I would love to, at a future meeting, maybe do a deeper dive on rating agencies so you understand key metrics. Because I think that's what has to be in people's minds. When you said to me, will you protect the AAA? And I said, I will not be the person who allows that not to happen. But it's on all of us. It's not just a revenue item. So I accept the challenge, and I understand I upset people maybe with what I would say is the reporting of the inconvenient truth. I feel like that's my job when it's supported by facts.
Madam Chair?
Senator Marsden and then Senator Edwards.
Thank you, Madam Chair. Mr. Secretary, you mentioned the concern around outflow of people, leaving the state. Has the administration been able to get their arms around what some of the causes may be, or are you still in the midst of analysis on that?
I don't think there's an exit. It would be great if there was an exit survey, if we could do that, but it's just a statistic, and we know where they're going. And they're going south. And from New England, they have migration ins and outs by states. They're going from New England to the Carolinas and south, a lot of it Florida, Texas, but because of taxes. And they also do an analysis of what's the net change of income levels going out and coming in. And our migration is actually, we're bringing in more lower paid people and losing higher paid people. The South is replacing lower paid people with higher paid people. So there's a lot of data on this, and this is where I hope with giving you the information, we can all say, okay, that is a problem. How do we stop this? And we could debate whether it's education or taxes or healthcare, but it's happening, and I think that's got to be an issue we talk about.
Senator Edwards, then Senator Saslaw, then Senator Hanger.
Mr. Secretary, thank you for being here. Appreciate it very much. I noticed that you say here the major sources have shown unprecedented strength during the first 7 months of the fiscal year. Is that correct?
Correct.
In fact, if you go down to corporate income tax collections are up. Growth in sales tax collections are up. Growth in withholding taxes, non-withholding taxes are up. In fact, every level, total general fund revenue collections are up. Sounds to me like the economy is doing very well in Virginia based on that. Would you not agree?
I would say that the people who are paying taxes are doing quite well, and I think that it's slices of the people who are paying taxes, corporates and individuals who are doing very well.
Okay. Madam Chair?
And I think,
Please, let's let him finish.
Have another.
Remember, 22% of our population pays almost 75% of our taxes. I think largely Northern Virginia is where that comes from, and I agree. You drive around Northern Virginia, I was just up there last week. It's stunning what's going on there.
Right.
That's not what it feels like in Richmond. And I feel like, and on the corporate side, 1% of the 1.5% of the corporate filers pay 85% of corporate taxes.
Okay, Madam Chair?
Senator Edwards.
Yeah, they're the ones that have the money, right?
Sorry?
The ones that are paying the taxes have the money. Is that right?
Yes, and it's a small percentage of those who do have that.
Madam Chair, if you look at it further, Virginia has historically had a higher education level and labor force participation rates than other states in the nation. Is that correct?
Yes, it has.
Yeah, and would you not agree that higher education is very important when it comes to prosperity?
Absolutely.
And we lead the country in that category. Would you not agree?
We are one of the high performers there, correct?
Are you aware that Virginia also underfunds higher education on a per capita basis more than any of the surrounding states? Other surrounding states give a more per capita funding for their higher education system than we do.
Mm-hmm.
You aware of that?
I'm not aware of that.
Okay. Well, would you not agree, if that is the case, we need to put more into higher education, not less? Would you not agree to that?
Need to understand that.
Okay.
Better.
Madam Chair, furthermore, are you aware that
This is your last question.
Yeah. One of the last. We have $25 billion in needs for public schools. Are you aware of that? We're short
I am not aware of
$25 billion in public school building funding.
Mm-hmm.
That's a need. Would you not agree?
I trust that that's accurate. I haven't seen that number.
And it seems to me, Madam Chair, that we need to invest more in public education and higher education and transportation, not less.
Yeah.
Sorry.
I'm
Go ahead. No, go ahead.
I accept all of that. I'm the numbers guy. I'm the revenue guy. I'm the rating agency guy. Where are all those higher education students going when they graduate? Because this is not showing they stay here. We are not adding jobs, and that is, I understand everything you're saying, and I don't think you're wrong, but when I look at the outcomes of what indicates a healthy and growing economy, that's not what's happening here. And the data shows that, unless you have a way to look at the data and tell me I'm wrong. I think we're having, because I don't disagree with anything you said. I don't have a lot of the facts that back that up or understand the gaps, but it's not translating, something's not translating into a sustainably growing economy.
Well, Madam Chair, I just finalized that we're the first best state in the country when it comes to business in the last 3 years.
But it's not adding jobs.
CNBC, according to CNBC.
Okay, Senator Sasslaw, followed by Senator Hanger.
You said, look at the facts, look at the statistics. So I just Googled the U.S. Census, and you're claiming we're losing people. From the end of 2010 to the end of 2020, which was 14 months ago, approximately, we grew at a rate of 1.5. We grew up 360-some thousand people, which ranked us 13th in the country, not last, or not second to last, 13th in the country.
Okay.
When I look and see what's going on in my region, that, and then this thing about somehow or other taxes have, I didn't think there was anybody left on this planet that believed that taxes has something to do with the price of gasoline. You all got to be the last ones. Crude oil, as an example, from December 31st of 2020 to December 31st of 2021, more than doubled. Not one single state raised their gasoline tax. You get that? Has nothing to do. There's only one thing that controls that price. That's that country over there in the Middle East.
Senator Hanger.
Oh, thank you, Madam Chair. I think we've probably gone on long enough, and I was going to make a friendly comment.
Please do.
Actually, just with the query over why the other part of the state, the rest of the state, which we're not identified in the valley and those other rural areas, but that's us. We didn't dip as low. Of course, we didn't have to come back as far either, because we have to remember that still the leading economic drivers in our domestic product in Virginia are agriculture and forestry, if you group them together. So we were still chugging along during COVID and didn't have to rebound as far once things could get back in order. So I think that is a part of the explanation, and I think a part of the explanation overall as we compare ourselves to other states is the fact that because of our economic drivers, which are pretty resilient in the Commonwealth with a lot of reliance on the federal government for our payroll, we didn't dip as low, so we didn't have to come back as far. So if you look at just base numbers, that modest growth is probably okay because we didn't dip as low.
Yeah, I understand. We're looking at recovery rates from however far you went. The recovery rates is the metric here, and I understand your point, though. Thank you.
Okay, any other questions? Well, thank you. We'll look forward to seeing you next month.
Yeah, thank you very much.
Thank you,
I do too.
Mr. Secretary. April, does that complete? There being no further business, the committee will rise.